Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Monday, 14th of August, starting the week after 2 weeks of red price action on the Nasdaq and S&Ps. We are starting a new week that looks like we are going to end the day in the green, but anything can happen. But right now, we are having some decent price action into the green. Let's first review the only one economic data that came out today, consumer inflation expectations. The previous was 3.8 and consumers are expecting 3.5. And look at this, they are lowering and lowering and lowering the inflation expectations. I don't share the same expectations as these numbers. I think 3.5 is too optimistic, but hey, consumer inflation expectations are going lower and lower. And if expectations are going lower, most probably consumer sentiment will be higher than if expectations are of higher inflation. So this looks like a decent number, bullish number that I think is fueling a little bit of the price action today on the Nasdaq. And another thing that it's fueling the market, it's NVDA, because NVDA it's looking to report earnings on the 23rd of August. For this week, 14th of August, we are seeing things like Cisco, we are seeing Rumble, we are seeing Home Depot, a lot of retailers this week. And I think the focus this week is for consumer discretionary and retail numbers. That's why tomorrow retail sales month over month over July is going to be also the focus for another analysts. And the rest of the week is building permits for some numbers on the housing sector and FOMC minutes at 2 p.m. on Wednesday. And nothing else. This week it's just continuation from last week in terms of expectations for China, for Japan, inverted yield curve control, and a lot of stuff that worldwide economy is looking forward. But for US, it's just retail sales and FOMC minutes. So be really focused on those numbers, because as I was saying, this week regarding earnings is all about consumer discretionary. And then next week, starting the 21st on Monday, on Wednesday 23rd, NVIDIA is going to report earnings. And why I'm talking about NVIDIA? Well, I'm talking about NVIDIA because looks like people is betting that they are going to do well. Look at this. This is NVIDIA daily chart, and we are just consolidating on this level that we got after earnings. We established 440 as the previous all-time highs, and we bounced and we continue higher. We rejected the 480 all-time highs and we started pulling back, the same as for the rest of the market. But let me check the where is the, oh my god, trading view is just moving all these things around. Where is the rectangle? So this area of consolidation was just the area in which we started holding and consolidating after earnings. We pushed higher, we couldn't hold, and now we are bouncing off the same one. And I think NVIDIA is trying to push higher ahead of next week earnings. And today is 5.20% on the day. NVIDIA is super strong today. And let me tell you, AI is going to be again on the menu for these earnings, and that will affect also Apple, Microsoft, Amazon, and all those, Google, Meta, all the big tech companies that are pushing this AI narrative. So NVIDIA is 5.30 in the green, but Tesla is the big red one today, 1.67 in the red, after it announced that it's lowering prices of some models, Tesla models in China. So lowering prices due to lower demand means pain for the investors. It's trying to cool here a little bit, but I think the action pre-market and I think it was quite bearish and it's still in the red. It's the only big name in the red today. Apple is 0.5% in the green, Microsoft barely in the green, Amazon, Google 0.80 is quite good, Meta 0.50, but the outlier is NVIDIA. And why I'm saying that? Because let's review the Nasdaq daily chart. We were in a series of a daily uptrend, this wedge that failed here. Quite interesting that we have to focus on these levels. This level is quite important for me because it rejected the last week high with a topping tail and we drift and we are sweeping lower. And look where we are trying to find some buyers. This is, as always, blue dot line, last week low and last week high. We are in the middle of these weekly levels. Ahead of this pivot, maybe we are trying to find some buyers. If we check the 30-minute chart, I have this pivot and also this pivot for consolidation. This was pre-market on Friday, choppy day on Friday. We look below on pre-market today and we push higher. And then we swipe again and we are up here. We are in the middle of these two pivots right here, rejecting 15,250. Barely, well, not barely, 0.70 for the Nasdaq, 0.30 on the S&Ps. I think the Nasdaq is stronger than the S&Ps due to NVIDIA earnings and other names that are being so optimistic. But if we go to the 1 minute chart, as you can see, we started chopping around, we squeeze higher, and we are trying to hold between these two levels on the 30-minute chart. The 200 is here, the 45 EMA is now above price, same as point of control, so I don't expect a huge move, but this move today it's quite decent. This is good for starting the week. It builds bullish sentiment, and on the daily, it's starting to show some kind of structure after these big red candles last week. We are trying to find some buyers. This is the thing that I like the most for today. But not everything is so bullish. Dollar is in the red. It's in the green, sorry. Look at this bottoming tail last week, and we are building higher. Today, we are building a topping tail rejection. This is quite harsh. Go up. It went up like... it went up 0.53 and then it went down 0.48. Barely in the green, the dollar. On the 30-minute chart, we are seeing this rejection, and on the daily chart, this is not the kind of price action that strong dollar you want to see on the strong dollar, because I was waiting for this trend line to resolve. We broke down, we bounced, we look way stronger than I initially thought, and we are still rejecting from below of this trend line. And let me tell you, as always, dollar strength is bad for the stock market. And it's not only the only thing that it's quite concerning. Dollar in the green, stocks in the green. The 2-year yield, it's also in the green. The 2-year yield and the 10-year yield are still pushing. So analysts and bonds market are still expecting higher interest rates, higher yields. And treasuries are also in the green. So a lot of divergences today. Strong stock market, strong dollar, it's a divergence, and high yield corporate bonds basically flat. These are high risk junk bonds, and this is risk on moves, but it's not. It's just in the middle of this coiling pattern. We are still coiling, but treasuries are in the green. Treasuries, after this breakdown, treasuries are in the green, and at the same time, the 2-year yield is also in the green. So something strange here, some sketchy moves, some sneaky moves, and I think it's not clear. We have to be patient this week. For all the expectations, retail sales tomorrow is going to be quite interesting, quite important to gather that information for analysts to see if yields are still going to be higher for the Fed continue raising hikes, or if retail sales are showing signs of slowing down, maybe the Fed will contain and will not hike. In that regard, let me review just real quick the estimates for the interest rates. As always, remember that August, we skipped that. In August, there's no FOMC meeting. We are moving to the 20th of September with a 88 probability of no interest rate hike. But the good thing is that we can see how the analysts are projecting the expectations of higher for longer. As you can see, we are still projecting an outlook of being at these levels of yields of interest rates for 1, 2, 3, 4, and 5 meetings until May of 2024, in which we will cut 25 basis points with only a 38. It's a little bit complicated to really estimate this long into the future, but for sure, look at these estimates. This is higher for longer, and there's no need for the Fed to continue hiking rates. This is going to be painful for the economy because we are in August, September, October, November, December. It's 4 months plus May, almost 9 months of these interest rates is going to be painful. We don't need, most of the people think that we don't need any more interest rate hikes. But the bonds market, it's also pricing this in. It's still pushing. If the 2-year yield continues pushing higher and the 10-year also moves higher towards 4.3, let me tell you, the stock market is going to be destroyed because the expectations are that Fed is not going to hike any more rates, but if the bonds market starts freaking out and starts moving higher with momentum like this day, above 5.1, the stock market is going to freak out. So pay attention to that. Gold is just, well, in the middle of a support. I mean, there's no edge in here after this daily downtrend. We tried to reclaim 2000, we couldn't hold, and we are now back at support at 1936. Copper is actually in the red, and it's not looking good, let me tell you. We broke again down this wedge pattern, and copper is just not pushing higher because copper is used in a lot of manufacturing and supply chains, and this is showing signs of weakness on the worldwide economy due to China, due to Japan, and all that stuff. So copper is looking quite weak on the daily. Silver, it's also barely flat. Metals are barely flat. And the most interesting thing is that the stock market is trying to hold support, but the small caps are filling this gap, but it's really not pushing higher. We try to move higher. We are now trying to establish this as support, higher low for an attempt to go higher, but IWM Russell 2000 is 0.46 in the red. Bitcoin is 1%, but it's just also in the middle of nowhere land. It's just here with this weird price action. And banks are all in the red. So that's why I'm telling you, be careful with the price action today on the Nasdaq. Everything looks like it's fueled by NVDA 1 week ahead of earnings next week. And with Tesla being this week, Amazon pulling back and retracing the move, and retail sales tomorrow, consumer discretionary is in the red, utilities, staples. I mean, there's a lot of stuff in the red, and dollar is in the green. So be really careful. What are your expectations for the Nasdaq today? Because there's a lot of days ahead for this week. We are on Monday starting the week. Tomorrow we have retail sales. Don't put all your eggs in the same basket. Just be patient, because I think today is not quite clear the direction if we are going to see a relief rally, a little bounce for a continuation lower into this pivot at below 14,900. That would trap a lot of bulls. So don't be that one that is holding the bag after maybe not adjusting your expectations in days like this. We are in the red, in the green, don't get me wrong, but be really careful because some other parts of the market are not converging with a bullish sentiment yet. And I think that's all from my side. Thank you for your time as always. If you found this video useful, please give it a like, subscribe to the channel because I upload videos every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. I hope you had a good start of the week. Remember that this week is for patience. Be disciplined. Wait for your opportunities. Tomorrow retail sales number is going to be quite interesting and it's going to move the market. So wait for that. If you are hesitating today, I'm with you. I'm also not liking these kind of moves with dollar, with yields, with banks in the red. It's not clear for me today that we are this bullish. So anything can happen. Remember, discipline and risk management are your best skills to learn to apply on these markets, are the key for your success. Stay safe, everyone, and see you tomorrow.